You are listening to ChartingWealth.com for Wednesday, the 10th of June, 2015. Have you always wanted to know how the stock market really worked and why? Well, here at ChartingWealth.com, we make it easy. Every day we track the total market, the S&P 500, the NASDAQ 100, and gold. We show you what's happening and why with no hype. So just sit back, relax, and learn how the markets really work and figure out how to make your millions. We are not a stock calling service. We are not a financial advisory firm. Our opinions are our own, and they are in no way to be taken as financial advice whatsoever. Let's jump right into the market. What do we have here? IYY. What is IYY? It is the total market. It's a total market index fund, an ETF, an exchange traded fund. It tracks the whole market, all the stocks. What's the market doing? Well, the red candles that we see in the market starting back on the 22nd of May show us that the market has been going down since then, all the way through the market ending on Tuesday the 9th, and substantially down on that two-day candle. Now, technically, the market is up 0.11%. That's a little over 1/10 of 1%, but we don't pay attention to a daily candle in and of itself. We're looking at the total market, and over the last day, the last 2 days on our candles, significant down movement, no narrowing of the MACD, the moving average convergence divergence. It is still drifting down along with the derivative oscillator, which is shown by light red rectangles on the bottom of our chart. And if you don't have our chart, you need it. You can ask us for it for free. All you have to do is go to chartingwealth.com, sign up for our newsletter, and we will send you a layout for our charts. And guess how much it'll cost you? Nothing, because they're available for free at freestockcharts.com. I think the world's premier stock charting service, and it's free. It's amazing. It is just amazing. Kudos to Chris Warden, his brothers, and Warden Brothers. Now, and TC2000, which is their paid product. Now, let's look at what's been going on. Market has been drifting down. It is below the 30 and the 34 moving linear regression lines. Those represent periods. So on a two-day chart, that would actually be the 60-day and the 68-day moving linear regression lines. We see that it bounced up off the Bollinger Band, and what we see happening is continued significant down movement. Let's revert now back to our 4-hour chart, and we see that the market went down in the morning, recovered a little bit in the afternoon, which put it a little higher than where it closed yesterday. But it's so telling to take a look at the charts rather than listen to the news and hear, oh, the market ended up 0.11%. Well, when you look at the charts, you can see significant down movement. We have our two-day trend line significantly below that, and the MACD on the 4-hour chart crossed over going down between the 26th and the 27th and has continued to accelerate down. So total market is down. Let's go back to our two-day chart, and we're going to go over to the SPY, which is what? It is the Standard & Poor's 500. Again, it's another exchange-traded fund that tracks the S&P 500. It is down significantly, rolled over on the two-day chart going down, crossing the MACD back on the 3rd of June, and has continued to move down. Actually started moving down with red candles back on the 22nd, as did the big market. We can see that we've drawn a little two-day trend line. It's only connecting actually 4 days. We like it when it connects 3 candles or 6 days. Now, if we revert back to the 4-hour chart, the half-day chart, you can see that it pretty much parallels what went on today with the IYY, the total market. S&P many times does. Again, stair steps going down since about the 4th, and just a little bit higher than it closed yesterday, and I'm doing this broadcast on the 9th for the 10th of June. Now, and again, I think as I told you, the SPY actually was technically down 0.01%. It was almost breaking even. 1/10 of 1%. Looks like it could be up just a little, but I guess not. It was a green candle at the end of the day for the last 4 hours, but didn't quite get above where it closed on Monday. So now let's go back out. So we've got confirmed down moves on both our 2-day and 4-hour charts for the SPY and the IYY. Now we are going to go over to QQQ, which is sometimes called the cubes. I tend to call it the Qs. It is the NASDAQ 100. It crossed over going down actually on the 5th of June. So fairly recently, it has been powering down over the last couple of days. It was down today 0.17%. And again, that's 0.17%, not even a 20th of a percent. So again, sometimes people can hear 0.17 and they think 17%. No, 0.17. So barely down today. But we're looking at the 2-day candles, significant down movement. We have a 2-day trend line that the market is significantly below as we convert over to our half-day or 4-hour chart. You can see that it is significantly below the 2-day trend line. We can see that there was a lot of down movement in the morning, a little bit of up movement in the afternoon. Derivative oscillator continues to power up. The lines continue on the MACD to diverge, and we have confirmed down moves also in the Qs. So all the markets, all 3 of the indexes that we track are down. Now we're going to go back out as they have been, and hopefully if you trade inversely, you've been making money. If you don't trade on inverse indexes, and what I mean by that, something called the QID, which tracks the NASDAQ 100, but in the opposite direction. That's what I mean when I say an inverse fund. You can make money in that fund as the NASDAQ 100 goes down, it goes up. So for those of you who do that, hopefully you've been in some down plays or down investments. For those of you who do not do inverse funds, hopefully you've been out of the markets as they've been rocketing down, as we have been talking about. No surprise. So let's go to gold. What is gold doing? Well, gold crossed over on the 2-day chart going down back between the 3rd and the 5th. It is continuing to move down on the 2-day chart. In other words, it is below the 2-day trend line. Actually was up slightly today, 0.22%. It again, we see the derivative oscillator accelerating. We see the MACD diverging even further on the 2-day candle that we have over the last couple of days. And if we revert back to the 4-hour chart, let's see what we see there. We see the 4-hour chart, again, still below the 2-day trend line. The derivative oscillator is reducing and looks like it could flip over on the 4-hour chart. However, the MACD continues to be in the negative, which again, we can confirm that gold is down on the 2-day chart and on the 4-hour chart as far as our MACD goes, and it's still negative on the derivative oscillator. So gold is continuing to move down, even though there was a little up movement on it today. Actually went a little negative at the end of the day. Again, we pay attention, as always, to our controlling chart, which is our big 2-day chart versus something that it's a quarter its size, the 4-hour chart. And we are below the 2-day trend line. So all of our indices are technically down on both the 2-day and the 4-hour charts. We are in negatives on all of the indexes that we follow and gold. Hope that that helps you as you move into Wednesday, the 10th of June. Hope you have good trading, good investing. God bless you. We love to hear from you. Please follow us on Facebook and Twitter, chartingwealth.com.